trying to understand the valuation of your property and what is the best exit strategy for that property. In this video, we're going to talk about how do you get to sell and what is the most effective way. So number one, zip code, subdivision, decade. You have to compare your property against the properties in your subdivision within the zip code, as well as the decade. If your house was manufactured or built in 1975, it is critically important to focus on 1970 to 1980. All appraisers, wherever you reside, look at that specific decade. They look at the approximate same size square footage, the number of bedrooms, bathrooms, garages. When was the last time you had done any work to the property? If you have not done any levels of work in the last 5, 7, 10, 20 years, that will have an impact on your valuation. So if you think about your house as an example, valued at $300,000, all the houses have been redone, and now you're trying to figure out you've done no work or very little work, you want to get maximum top dollar. How are you going to be competing against those properties that are valued at that amount of money for you doing almost no work? So think about when you're now trying to sell it, you got a buyer that wants to buy it. How much money do they need to invest in your property? If you are not bringing it up to market, how much do they need to invest to bring it up to market? So if you have, you think of selling your house as an example at $300,000, all the other houses are being sold for $300,000, and you've done no work and they need to spend $50 a square foot to bring it up to condition. Your house is 2,000 square foot. You want to sell it for $300,000. They need to invest $100,000. That means you need to be selling your house at no more than $200,000. Otherwise, they are going to be overcapitalizing on that property and there will be no return on investment for those people. So it is critically important to understand where you compete against everybody else. What is the level of work that everyone else is doing on those properties? And what is going to be your exit strategy on that? So are you prepared to get your house refurbed or refurbished? Or do you just want someone to come in, invest in the property, and they do the work and then get to sell it? So ultimately, for you, you need to be looking at these simple components, understanding what is the market value, how quick are you going to be able to get rid of it, and if you're not prepared to put in the money to do the work, you're never going to be selling for the highest level in the area. From an investor perspective, what the investor is looking at doing is understanding the market value, the after repair value, less 25%, less any specific closing cost, and that is the formula that they use to understand how much money they need to be putting into the property. So we invest in properties. If you are looking for some guidance, reach out to us at sellpropnow.com. Put in your details. I'll be very happy to talk to you, looking at an exit strategy in understanding where your property, and this is very specific to the Houston area. Reach out to us. We can have a video call and we can go through all of the detail, understand what is your best exit strategy against the current market in that area. You've got nothing to lose. It may just be easier to sell your property to an investor instead of you spending the money and the time and the headache trying to get the property up to market condition, for your property to then be sitting unsold for months on end. You doing these investments and you land up not making money on it because you didn't do the right thing. So go to sellpropnow.com, reach out to us, and let's see if we can help you.